Hello everyone, good day. I hope you're doing fine because in the middle of this pandemic we have to maintain our health and stay safe as well. In this video, Rofi, my partner, and I will introduce you to taxation, which is it's in taxation course taught by Mr. Nandavito. As we all know that taxes are the main source of state revenue that are used to finance its expenditures that are self-liquidating, and recently our government is improving itself in terms of tax administrations that is known as the term self-assessment. Each taxpayer is entrusted with reporting their own wealth, calculating their tax themselves, and paying the tax to the bank. So in this case, we can see that the government really entrusts everything regarding the processing of the tax to the taxpayers. So it's our duty to answer the trust that has been given by the government by settling tax payments honestly, fairly, and cleanly. So if you are a taxpayer, you have to pay it with honesty. In this section, I will explain about the definition of tax, the history behind it, and the function of it, and the rest will be explained by Rafi. According to Professor Dr. Ahmad Sumitro, taxes are people's contribution to the state treasury based on law with a receiving counterparts, or in bahasa timbal balik, and used to pay for general expenses. I repeat, taxes are the people's contributions to the state treasury based on law with the receiving counterparts and used to pay for general expenses. Taxation in Indonesia is regulated through Article 23A of the 1945 Constitution and other regulations such as Law Number 28 of 2007 concerning general provisions and tax procedures. And then, who pay the tax? The tax is paid by taxpayers, and taxpayers are divided into three. First, individuals such as freelancer, an employee, and a businessman. And second is corporates such as state-owned enterprises, cooperatives, and limited companies. And the last is government institutions such as central government institutions. And now we are going to talk about the history of tax in Indonesia, and it's divided into three eras. First is pre-Dutch colonialism, the second is the Dutch colonialism era, and the third is the independence era. Even before the Dutch colonialism, the tax is known as upeti. It's a tax that must be paid by the people for the personal and operational interests of their kingdom. Examples such as building a palace or financing the kingdom's household. When the Dutch entered and colonized Indonesia, that's when we got to know the modern tax system. Residence tax and business tax were the types of tax at that time. And the Dutch colonial government also differentiated tax rates based on the taxpayer's nationality. In 1885, for ASEAN citizens, the government imposed an increase in the residence tax to 4%. So there was a negative impact as a result of the imposition of taxes in the colonial era and the previous era, making some people think that taxes were only a form of the superiority of the ruler to the people, because at that time, almost all sectors of tax collections were carried out manually and without supervision. This is what sometimes became the cause of tax collection irregularities at that time and left a bad impression until now. And then, entering a new era of taxation legislation, since 1984, there have been major changes that no longer use official assessments but use a self-assessment system in tax collection in Indonesia. And here are some of the basic tax laws used in Indonesia during the independence era. The function of tax. Because taxes are a main source of state revenue, including expenditures for development, so that taxes have several functions such as budget function, setting function, equalization function, and stabilization function. I will explain about budget function first. Because taxes are a source of state financial income by collecting funds or money from taxpayers to the state treasury to finance national development or other state expenditures, so the tax function is a source of state income that has the aim of balancing state expenditures with state income. Setting function or regulatory function. Taxes are a tool to implement or regulate state policies in the social and economic field. The control functions include taxes can be used to curb the inflation rate. Taxes can be used as a tool to encourage export activities such as taxes on exports of goods. Taxes can provide protection for domestically produced goods, for example, value-added tax. Taxes can regulate and attract capital investment, which helps the economy to become more productive. Equalization function or distribution tax. Taxes can be used to adjust and balance the distribution of income with the happiness and welfare of society. And the last is stabilization function. Taxes can be used to stabilize economic conditions, such as to overcome inflation by setting high taxes so that the money supply can be reduced, and to overcome deflation, the government lowered taxes so that the amount of money in circulation could be increased and deflation could be overcome. The four tax functions above are functions of taxes that are commonly found in various countries. In Indonesia, the government has focused more on two tax functions as regulator and budgetary. The government agency that manages state taxes in Indonesia is the Directorate General of Taxes, which is under the Ministry of Finance. That's all from me. Before getting to review section, let's get back to make sure that you guys understand. The definition of tax is people's contribution to the state treasury based on law without getting counterparts and used to pay for general expenses. Before the Dutch colonialism, we called tax as upeti, and after the Dutch entered and colonized Indonesia, that's when we got to know the modern tax system. Tax has several functions such as budget function, setting function, stabilization function, and equalization function. Thank you.
Okay, thank you so much, Dila, for the explanation before. Right now, I'm gonna continue to presentate about tax collection system. In Indonesia, there is three ways to collect tax. First, self-assessment system. Second, official assessment system. And the third, withholding system. Okay, let's go to the first. Self-assessment system is one of the tax collection system in effect in Indonesia, where the system requires determining the amount of the tax that must be paid by the taxpayer concerned independently. And the payer role here is to calculate, pay, and report the amount of the tax. And the government role, or the tax collector role, as a supervisor of the tax activity of the taxpayer. Example is value-added tax, or PPN, or income tax, or PPH. Second is official assessment system. It's a tax collection system that gives authority to the taxpayer to determine the amount of the tax owed to the tax authorities or tax official as tax collectors. And the payer role here is passive, and the value of the tax payable will known after the tax assessment is issued by the tax authority. Tax authority's role, an example in PBB payment, the tax office is the party that issues a tax assessment letter containing the amount of PBB owed each year. The third is withholding system. This tax system is a third party has the authority to determine how much tax to pay. So there is no taxpayer or tax collector to determine, but the third party. An example of withholding system is a deduction of employee income by the treasurers of related agency or company. So employees no need to go to the tax office to pay the tax. Okay, let's continue to the types of tax. In Indonesia, there is three types of tax, divided by three types. The first is by class or imposition. Second is nature. The third is collectors and manager. The first is class or imposition. There is two based on the class. The first is direct tax, and the second is indirect tax. Direct tax is a tax whose burden is borne by the taxpayer and cannot be transferred to other people. Example, income tax or PPh. Indirect tax is the burden of the which can be transferred to another party because this type of the doesn't have a tax assessment letter. The second, by nature, it's also have a two different. The first is subjective and second is objective. Subjective tax is a tax that originates in the subject, while the objective tax is derived from the object. Example, income tax. An objective tax is a collection that takes into account of the value of the tax object. Example, VAT. And the last is by collectors and managers. There is also two different here. Is central taxes and regional taxes. In the central tax, are taxes that are collected and managed by the central government. In this case, most of them are managed by the Directorate General of the Tax. Example, income tax, VAT, sales tax on luxury goods, stamp duty, land and building tax. And in regional tax are taxes that are collected and managed by local government at both the provincial and district, city levels. And the example is advertisement tax and entertainment tax and etc. Okay, I think that's all from me. If you are confused, you can asking in the column commentar. Don't forget to like, subscribe and comment. I will wait your comment here. Thank you so much.